In today's show, DTIC update on US tariffs. Steenhuisen says increasing the GNU is nonsensical. Cape Town's mayor, on getting the basics right, calls for Cyril to fire Gayton after alleged racial slur, and what was once China's largest property development company to delist. It's Wednesday, the 13th of August. This is your BizNews Briefing. I'm Bronwyn Nielsen. The Department of Trade, Industry and Competition and the Department of Agriculture held a joint press briefing yesterday on US-SA relations. Let's hear directly from Minister of the DTIC, Parks Tau.
Following the 30% unilateral tariff imposed by the United States, which came into force on the 7th of August 2025, government has been implementing a response anchored on 5 key elements. 1, continued engagements with the United States to secure a deal and reduce the tariffs. 2, the diversification of exports to alternate markets. 3, an economic response package to vulnerable companies and workers. 4, trade defense against import surge and dumping. And 5, demand-side interventions.
The political chessboard is moving again. The African National Congress is looking to expand the government of national unity, inviting more opposition parties into the fold. But Democratic Alliance leader John Steenhuisen isn't convinced that it's the right play. Last week, the ANC announced plans to start reaching out to opposition parties, hoping to strengthen the unity government, which has been struggling with internal disagreements. After the ANC's NEC meeting, the ANC said expanding the coalition is now firmly on the table. But Steenhuisen says more parties won't solve the problem. In fact, he thinks it'll just add to the chaos. Let's take a listen to what he had to say at a recent media briefing in Johannesburg.
We entered into something called the Statement of Intent. It was signed by all parties. The Statement of Intent makes it abundantly clear that if new parties are to be added to the Government of National Unity, that this has to be done in consultation with the parties that are currently in the GNU, and such a decision will be based on the sufficient consensus clause within that particular Statement of Intent. I don't believe that expanding the GNU is going to assist the GNU to go forward. I think it's going to complicate things even further. We already have 10 parties in the GNU. It's one of the largest coalitions in the world. And I think that there should be rather more energy and focus spent on improving the relations amongst parties within the GNU, particularly on how you find ways to consult, how you deal with conflict management.
Michelle's a mom who traded in her Fiat 500 for this beast right here. But why the momentous move, huh?
I needed something bigger to keep up with my growing son and his many sports bags.
When you traded in your car with We Buy Cars, was it an easy conversion?
I see what you did there. The process was just so easy. I was given a tablet, had to sign, and that was it.
Basically, We Buy Cars is no mess, no... Okay, it was nice chatting. We Buy Cars, the easiest way to sell your car by far.
At Sun Exchange, we make going solar simple, profitable and completely risk-free. Join over 100 satisfied South African customers already enjoying the benefits of risk-free solar. Start saving today. Visit sunexchange.com and join the solar revolution.
The DA podcast this week focused on behind the scenes with Cape Town's executive mayor, Jordan Hill-Lewis. The mayor shone a spotlight on something close to every South African's heart, and that is job growth. Because let's face it, building opportunities and supporting local businesses is key to a safer, more prosperous future. Let's hear directly from the mayor on why job growth is a priority for South Africa.
Nothing improves human capital, improves society, solves social issues, solves crime. Nothing does that as well as a job does.
Sure.
It really is the most important solution. And yes, I mean, Cape Town, for one period at the end of 2024, I think this was Q4, created more jobs than all the other cities in South Africa combined. But still, unemployment in Cape Town is 21%. It's 36%, 37% knocking on the door of 37% nationally. It's still way too high. So we've still got work to do. That number has to come further down.
Interestingly, Hill Lewis also puts Johannesburg in the spotlight and stresses that getting the city back on its feet is a non-negotiable for South Africans, and it's all about getting the basics right before doing anything else.
Our project to fix Joburg is so important because it is such a big chunk of the national economy. Just do the basics. People often debate with me why Cape Town doesn't have a sophisticated sector support program. Why aren't we, subsidizing certain niche sectors? And what is our strategy for robotic biotechnology or whatever. And I always say, we have no strategy for that. Our strategy is to do our job, and then like businesses will come, because that's what they want. I do not claim to know anything about those niche industries. Certainly not enough to be able to develop a strategy that's going to set us up as the hub for them globally.
Exactly.
What I do know is that businesses of every sort require certain basic things in order to function and succeed. And if you are a manufacturing business in South Africa today, just imagine the obstacles that you have to face. You're a manufacturing business. You've got to deal with load shedding for the last decade. Manufacturing relies quite a lot on electricity. Your municipality can't supply water. The roads are crumbling, so you can't get your goods to market. When you do get your goods to the port doesn't work, so you can't sell your goods globally. Then you've got like this extremely restrictive labor environment. You don't have any say in the what you're able to pay your work. So the obstacles are so overwhelming that when you meet a manufacturing business that's actually made a go of it, it's a miracle. It's an economic miracle. We must be extremely grateful for those businesses that have survived that. And we must stop putting further plans, strategies, master plans, 10-point plans, 20-point plans, 5-point plans. Stop it all. Just focus on those obstacles: power, water, roads, ports, trains, a more competitive labour market.
Just do the job.
South Africa's Sports, Arts and Culture Minister Gayton Mackenzie is back in the spotlight, and it's not in a good way. Some of his old social media posts have popped up again, and they're causing quite a stir because they allegedly include a really offensive racial slur. The posts, which take aim at Black South Africans using some pretty harsh language, are getting a lot of people fired up, especially since Mackenzie's been pretty vocal himself about fighting racism. These tweets date back to when Mackenzie was still a businessman and leading the Patriotic Alliance. In one of them, he allegedly went after the term Black Diamond, but used language that is widely considered unacceptable in South Africa. Now, political commentators and, of course, the social media contingent are calling him out for being a hypocrite. It certainly looks like the controversy around Mackenzie isn't dying down anytime soon.
I think the president can act properly. He's basically gotten rid of several people for much less than this. And it's something that I think most South Africans, if they look at it honestly, would realize that this is something that we cannot accept right now. It doesn't matter who you are. It doesn't matter what color you are. When you use the K word in that context, it is unacceptable and should be punishable.
Now you can get the cheapest Forex rate around, right here on Shift. Pay less for your dollars, pounds and euros here, and get to shop more here, and do more here, and enjoy more ooh la la here. Shift also lets you trade and transfer currencies and buy shares in the world's best companies. It all happens right here on Shift. You won't find a cheaper Forex rate anywhere else, no matter where you bank. Download the Shift app today.
Big news on the financial front. We could see a US interest rate cut potentially soon. Jay Barry, JP Morgan's head of global rate strategy, says recent economic data may just give the Federal Reserve the green light to lower rates as early as September. Barry shared his insights on Bloomberg's The Close, pointing to signs in the US economy that could push the Fed to make a move. And of course, investors and consumers are keeping a close eye on the Fed's next steps.
If you look at it, short-term markets are basically fully priced for a 25 basis point cut in September, pricing in about 60 basis points of cuts for the remainder of the year. So a little bit less easing than our forecast for the balance of this year, but broadly in line with what we would expect for a September cut right there in the context of a labor market that's been weakening.
Was there nothing that made you uneasy about today's CPI report? Because I feel like the market really just took it in its stride and was like, oh, sure, services inflation, that's fine. Airfare's up, doesn't matter, it's going to be all good. But there's plenty to be worried about, I thought.
It absolutely did. I think the overall core number in line with what we would have expected, but I think there is some encouragement from the fact that you didn't see any pickup in core goods pricing so far, where it's another month with the tariffs in place where you haven't seen them pick up. That has given market participants a bit more sort of lack of concern right there. And you pivot it back to the labor market after today, that if we know the Fed has an asymmetric reaction function and seems to be more concerned about labor market weakness than inflation being above its target, and with the slowing we've seen in private payroll growth, it kind of gives the green light to go back and think about the Fed cutting in September, even with inflation very far away from the Fed's target.
Prior to this report, were you in the camp that we were going to get those 2 rate cuts this year that were put on the dot plot?
So we actually changed our forecast last week. It was on a little bit of a delay after the weak July employment data.
Yeah.
And normally I don't think we'd make a change based off of a single employment number. But when you add that in with the dissents that we saw in July, and the president has nominated CEA Chair Miran to the seat that has been vacated by Kugler, it tips the balance in that favor, particularly when we know they're more concerned about bigger labor market weakness than inflation remaining well above target right there.
Elon Musk, founder of XAI, has accused Apple of giving preference to OpenAI on its App Store and has threatened legal action. Bloomberg's Kurt Wagner breaks it down with Caroline Hyde and Ed Ludlow on Bloomberg Tech.
He is claiming antitrust behavior by Apple, saying that the company is, you point out, Ed, is favoring OpenAI. It's putting OpenAI in more prominent positions on the App Store, artificially, in his mind, putting them higher on rankings lists. Now, of course, some of those rankings lists are editorially curated by Apple employees. That's been the case for years, and it's always been a challenge for developers to try and get onto those lists, to try and get that sort of publicity that way. But again, a lot of this is also just based on rankings, which apps are downloaded the most frequently. And in some cases, OpenAI and ChatGPT are the top of those lists.
And you use X's own community notes. And they point out that it hasn't always been OpenAI at the top of the pile when it comes to other generative AI chatbots. Others have eclipsed it even since the OpenAI and Apple deal, Kurt. But also Sam Altman weighed in a little bit too, right?
He did. He had some sharp words for Elon Musk, pointing out that it was sort of rich for Elon Musk to complain about this when, in Sam Altman's words, he's putting his thumb on the scale on the X algorithm, right? He's changing the things that you can see on X to reflect Elon's view of the world, or Elon's favorite topics. And so that was sort of the throwback that Altman had for Musk there. And the two of them obviously have a long history, Caroline, as we've talked about repeatedly on the show. So for those who have followed, this is sort of just the latest in that saga.
So Apple has not responded to requests for comment on this, but like you, I went through all the documents available and Apple explains the methodology behind the rankings. But Elon Musk is also complaining that OpenAI and Apple are technology partners, and for that reason, they have a bias toward them. Could you explain that bit?
Yeah, so last year at WWDC, Apple announced a partnership with ChatGPT that it was going to integrate some of OpenAI's technology into the iPhone. And so he's claiming, and this is the reason in Elon Musk's mind that OpenAI is sort of getting this favorable treatment. Now, I have to point out that Elon Musk is not the first person to kind of go after Apple over the years for making things difficult on developers they might compete with, right? Facebook and Mark Zuckerberg are at the top of the list in terms of banging the drum about Apple being anti-competitive over the last several years with the App Store fees that they take and other things. So Elon Musk is not alone in sort of his view on this. Now, whether that view is simply formed in any actual real fact or just opinion, I think is the challenge here. And clearly he's very upset with OpenAI's relationship right now with Apple.
China's Evergrande Group said its Hong Kong stock will be delisted. That's according to a filing to the Hong Kong bourse on Tuesday. Evergrande was once China's largest developer by sales and was worth more than $50 billion in 2017. That was at its peak. Bloomberg's Min Lo reports.
So the company's shares are going to be removed on August 25th, and Evergrande has said it's not going to appeal against that decision by the Hong Kong Stock Exchange, because what happens here is that the company, as you can see on the chart there, it's already suspended trading since January of 2024 after it received this liquidation petition from the Hong Kong courts. And since then, it hasn't been able to resume trading because it hasn't met the criteria for that. Typically, you would need to submit an updated audited report, and you need to have your wind-up petition dismissed. You need to have the liquidators discharged. Obviously, it hasn't met any of these, and if you've been suspended from trading for more than 18 months, according to Hong Kong exchange rules, the company can be delisted. So that's what is going to happen next.
So, Minmin, what's the prospect for shareholders recovering the value of their investments here?
Yeah, to be honest, it's going to be very, very little because the value of their investments had seen a precipitous drop since 2021 when the company had first defaulted on its dollar bond. And according to Christy Hung, our Bloomberg intelligence analyst, she's saying that equity shareholders need to be prepared for near total losses. And that's because there is still a long list of creditors queuing up to get paid. And equity shareholders are, of course, at the back of that queue. You add to that the complication here that offshore shareholders are going to find it very difficult to get their hands on any onshore assets because of the different jurisdiction here. So it's going to be pretty pessimistic for shareholders.
Min, Evergrande has really been at the heart of China's property crisis. What is this all going to mean for the future of the real estate sector?
Yeah, I mean, obviously it's a big blow to the confidence in China's property sector because this is such a stunning collapse of a company that at one point was the largest property developer by sales back in 2017 or so. It was worth about $50 billion in market cap. Now it's shrunk to the size of about $270 million as of last trade in January 2024. And it all started when, in 2020, the Chinese government started cracking down to get the sector to deleverage, putting a cap on the amount of debt to assets ratio that these companies can have. And so far, we have seen over the last few years, many of these big developers, especially private ones, already defaulting on some of their debt, going through debt restructuring. There are a couple of mid-sized developers that have suspended trading that could potentially also face the risk of delisting. But at the same time, we're already several years into this reform, right? We had seen a very fragile recovery so far in home prices, home sales, although property investment every month has been still down about 10% or so. So it's going to be a long road towards recovery for the China property sector. We might still see this continued consolidation and reduction in the number of property developers in China.
That brings us to the end of today's BizNews Briefing. We'll be back tomorrow with more context on the global and local front. Thanks, as always, for joining us.